All right. Good morning, everybody. Welcome to our Wednesday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. I hope everybody's having an absolutely amazing day. We are getting rolling here we are the 1st of July. This is our first version of the Daily Market Commentary going live. So glad to see so many of you here joining us this morning. I'm sure some more will join us a little bit later. If you're new to the channel, what we do every day is we look at the same futures markets, 10 to 12 futures markets, identifying potential breakouts and reversals. And we started doing this as a live session because I've had a lot of people say, hey, you know, can we ask questions during the Daily Market Commentary outside of the normal Traders Army live trade room? So we thought that we would add this. My goal is to do this every Wednesday. Every Wednesday we'll do the live version of the DMC, but I still want to cover our main DMC topics. What I've done is I've allocated 30 minutes to do this morning. Whereas it normally takes me 10 minutes, I'm giving myself 30 minutes to go through these markets. So if you've got questions, feel free to type them in the chat box. I will say there's a bit of a delay. There's a bit of a delay in the chat window. So if you type a question and I don't get to it right away, that would be why. So all right, let's go ahead and dive in to our markets. Now, yesterday we had a really big rally up in the markets, a really big rally, and I got stopped out of a couple of trades yesterday, and I'm okay with that, right? And anybody who tells you that they don't get stopped out is BSing you. But interestingly enough, we had a really nice reversal come in yesterday at the end of the day that has continued to work out. So starting with the S&P, we rallied up hard at the end of the day. We did see a bit of weakness in the momentum towards the end of the day, and we came into our supply level and got a pretty nice move down. Now, that supply level, we came more than halfway into the level. So even if you said, you know what, the markets have been going up all day, I'm going to shift this to a confirmation entry, then you still had the opportunity to enter that trade. Now, we did have a little bit of the 6-candle rule come into play. So what is our 6-candle rule? Remember, our 6-candle rule basically says that we will take a trade off the table if it hasn't started making my move in 6 candles, or we move our stop to break even. Well, if that's the case, if you did that here, 1, 2, 3, 4, 5, 6 candles later, it had kind of done nothing. You move your stop to break even, you're still in the trade now as it's continuing to run down. Now, I would say that we're at about a target 1 area right in here. To me, this is your first target area. So take a little off the table if you did get this short up here. I know I spoke to a number of you that did get this short, and it's been a really nice little move away. Now, we did have this blue line here as a potential breakout. The basing that I always want is going to be right below the level. So in my mind, this isn't quite close enough for breakout basing. I would need that basing to be more up in this range, right? So that's where we had quality basing. So we actually did get basing after that on that number. That became a kind of a line of control. So now what I'm going to do is, because we've traded through this level a couple of times, remove it. We traded more than halfway into this zone. Now, I do believe that a level is a level until it's broken, but my probabilities get lower the deeper that we trade into that zone. And so by trading more than halfway into that zone, I think it makes sense to just remove this level at this point, right? I'm not going to lean on that one again. Now let's look at my 4-hour trend, and my 4-hour trend is telling me that we did put in a little bit of a higher high yesterday on our 4-hour market. And that's really why I was willing to take shorts, because I'm willing to take shorts until the market tells me to stop doing so, right? And we had done really well the prior week on some of our shorts before yesterday's move. But that's why this one became a confirmation entry as it shifts our trend direction. So now what we're looking at is I have the opportunity to go long. We have longs and we have shorts both at play, because we are kind of in that, you know, that area halfway in between. And I wanted to go to the 15-minute chart, grab the wrong time frame there. So when I go to my 15-minute time period, as I come a bit lower, you know, we've got this level here, which is a bit of a retest of this area in this range. So this 3037 is a bit of a retest of this 3033 over here to the left. And when I look at that 3037 followed by that 3033, that tells me that those are retest levels of one another. We are coming into yesterday's little pivot low that happened around lunchtime. And from yesterday's little pivot low that happened around lunchtime, then I'm feeling like this could be a little place for reversal. So what I'm going to do is look to the hourly chart. It's not a phenomenal level right in here. It's not a phenomenal level, but I'm okay if right here you decide to say, let's take a candle-to-candle opportunity in here as a potential trade. So let's look at that as a potential area right in here, candle to candle. And the reason I like that as a potential trade at that candle to candle zone is because we've got that long lower wick. Long lower wicks are reversal candlesticks. Now remember, this candle just printed. And remember, when we trade candle to candle style, the market has to print that candle, meaning that candle has to be finished with all of its movements. And since it's 7:05 a.m., we're now 5 minutes into this candlestick. So if you wanted to give this a go, you're looking at an entry at 30.73 with a stop at 30.62. So it's a fairly small level. If that's a bit too wide for you, then just go to the micro, right? I mean, if you don't like to take a 9-point risk, go to the micro on the ES. All right. And take it on the micro. You still have the same entry and stop in place. Okay. Matter of fact, let's throw that one in there just as just a little one contract micro just for fun. Just throw a little one. All right, so we'll just pop that in there. Let's see if price comes back up into that region just to give us something to look at as we move around. Okay, so next let's take a look at the Russell. Looking at our Russell market, we've come up into our 15-minute reversal level, the same area that we spoke about yesterday, and we did get a little bit of a move away. We put a trade update out there for those of you that follow our regular trade updates. We put a trade update that we were taking some money off the table on this one pretty quickly, and it was mostly because our 15-minute chart, when we look at it, we had come into it. We moved away, we came back into it, and then it moved down. So we took some money off the table on this one pretty quickly in our trade feed update. Even if you stayed in the trade and didn't follow the 6-candle rule, or maybe you wanted to get back in, you've gotten a little bit of a move away, and so it's worked out pretty well from that position. Overall, though, when I look at this on an hourly chart, what does that setup really look like? For those of you that watch this, think about what that setup really looks like when I identify that. So I see an area that we've hit once, we've hit it again, we've come close to it again. That oftentimes sets up for a strong breakout, okay? That oftentimes sets up for a strong breakout, which would be above that region there. Let's see. Scott Gorman says, do you believe that the zone from yesterday is used up, or would you try it again since it didn't go halfway into the zone, 30.64 by 30.56? You're talking about the ES on that one, Scott. So let me go back. Remember that there is a pretty significant delay in the chat box versus when you guys actually hear me talk. There's a bit of a delay. So 30.64. You talking this area here right in there. Yeah, I think that there could still be some area that's left over here, Scott, and that's why that there could be some demand left in here, and that's why I'm taking the candle to candle trade, because I don't know that there is. I don't know that there definitely is something left, and so your better trade is to get long at this area here. But if you didn't get long down here, I would wait for us to get higher than that hourly candle's high. So that's what candle-to-candle trades are good for, is they allow me to ride the momentum moving higher. All right, so let's go back to that Russell position. Thank you all for for commenting. Yes, it does look like a potential breakout. So that breakout line I'm going to put that breakout line in place. Now, if you're saying, you know what, Chuck, I just don't believe it. I'm a perma bear, and I think that we are still going to go down. I think this is all a bunch of bull, and I believe that the markets have a better chance to fall. Okay, and I'm fine with that. Looking at my 4-hour time period, the Russell is pretty much entrenched in a sideways. It's not, we technically have a higher swing high, but if you really want to look for a short, when you go to the 15-minute time period, there's actually a decent little reversal spot right up here if you're looking for a short. So if you want one to go short on today, this is probably the better one from what I can see. I think that the long stands up a bit better, just staying with continuation of what happened yesterday. But keep that in mind now. And I'm going to look, by the way, at the end of the session. We're going to, if I go quickly enough, we'll have some time to take a look at some options setups for the day. I would like to take a look at trade in the daily SPX options and then maybe some individual equities. That's kind of my goal. So the NQ yesterday was a stop out. No ifs, ands, or buts about it. And got a really great question from a member who said, where should my stop have gone? And in this case, the stop goes above the wick of the leg in. Now, you could theoretically also place your stop above the pivot, but the tightest your stop can be is the wick above the leg in. And so in this case, price moved into the level, gave us an entry, and then immediately stopped us out. And I put this out on Twitter yesterday for those of you that follow me on Twitter. If I'm going to get stopped out, that's how I want to get stopped out. I want to be proven wrong quickly, because if I'm proven wrong quickly, it tells me that I can start looking for other trades, or I can see in the other markets if there's a better opportunity. And that's exactly what we saw happen yesterday, is that we did get better opportunities in some of our other markets by looking at better supply areas when we saw a bit of an exhaustion in our overall move. And so now we're coming back down. I left the line here because I think that the line could still be valid. I'm wondering if old supply is going to act as new demand. And that was one of the things that we put in our trade update yesterday, was that old supply could act as new demand. And in case that old supply acts as new demand, then you have a potential for a reversal here. Now, it lines up very well with our candle-to-candle setup. So just keep that that area or potential area in mind today. On the 4-hour, we actually put in a pretty clean head and shoulders pattern that didn't wind up going to fruition. And so, our all-time high is still sitting up here. There's no reason to think that we can't continue to move a bit higher from this pace. Now, one thing I do want to cover on the ES, and I'm going to go back to the ES for just a minute, because the ES, the ES is my main market. All right, I lean on the S&P as my main market. I do want to talk for a second about the daily chart. And the reason I want to talk about the daily chart is because the fact that we have yet to come below this wick is important, because this is we had a swing high and a swing high. We did have 2 consecutive lower swing highs, but I don't yet have a lower swing low. Right? The fact that we were unable to get below this swing low kept me out of a lower swing low on the daily time period, which is really now just a kind of a picture of consolidation. And that's important, because a lower swing low would tell me, okay, now our daily trend has changed, right? Trend is important when we look at all the different time frames that are out there and all the different time frames that are available. In my mind, the bigger the time frame, the more important that trend is going to be. And so just, when you're saying, well, I'm not sure if I should be bullish or I should be bearish, what you should be right now is letting the market tell you what to do. Instead of trying to be bullish or trying to be bearish, just let the market tell you what to do. And so in the Russell, if you're looking at the Russell as our weaker market, if you want to take that short, that's fine. Look how small that level is. Is it okay, by the way, to be long the ES, right, on the hour to hour on the candle by candle trade, and then get short the Russell up here? Sure, because if I get stopped out of that Russell, my S&P trade is going to continue to move. It acts as a natural hedge. If I get into the Russell and then I've taken my stop and I move my stop in my S&P because I'm using candle to candle and it reverses down against me, now I can close my S&P trade and the Russell can keep moving, right? And that's that's how we manage and hedge our multiple positions. So just keep that in mind as it's something to look at. All right, let's move over to commodities, look at crude oil and gold. Looking at crude oil, so we did have a 15-minute level up here in crude that has met entry and is coming down. Now, we did get a bit of basing before the level, so you may or may not have decided, okay, this trade isn't worth it based on the basing. However, this has come into our reversal and has really started to make a nice move away. So if you took that position, you're getting a little bit of a move down from that trade. I would say that your target is, your best target is still down here at this 38.50 where we've got the area of demand. I think that's, none of these are quality demand areas. Looking at this on a smaller time period, if you miss this trade and you say, okay, well, we're moving down, I want to get involved into this. Looking at the 15-minute chart, you have a little level right here that might be worth taking a trade. So keep that one. That's a nice whole round number back there at 40. Formed early this morning, so you could get a decent little reversal back into this region some point today. That could be, by the way, if you took the short up here, take your stop and move it to just above here so that you've locked in a little bit of profit on that trade. So hopefully you're able to catch that one. That one's moving along pretty nicely. Let's look at gold. So in gold, this frustrated the hell out of me yesterday. We had a breakout trade with no basing, and that is so frustrating. When I saw that thing continuing to move up all day, that was very frustrating. Now, that's only frustrating for those of you that didn't get in, because back here was our trade from the trade worksheet. Is anybody still in the trade from the trade worksheet, by the way, that we posted? I know a number of you that follow the trade worksheet, you should still be in that position off of that move down there. That was one of them that Justin talked about that on the Trader Summit last week as well as an area. So it is continuing to move. I was hoping that if you missed it down here, you'd get some basing here for a retest, and unfortunately that just did not happen to get us an opportunity in for a retest. But when I look at this thing on the 4-hour overall, we're obviously continuing in an upward momentum. When I go all the way back, like way back, we are closing in on this line here of resistance on the weekly chart. Now, Chuck, what does the weekly chart line of resistance have to do with today? Are there still orders left from back then? Maybe. I'm going to go with probably not. But what I do know is that a lot of traders are probably looking at this line, right? And that line is that whole round number area there at 1,800 is an important whole round number, because now we have the ability to go higher and to make it back up to this region. So, I know we don't normally go all the way out to a weekly chart when we're looking at intraday trading opportunities, but the reason I'm looking at that is because it doesn't make sense to look for short positions when we have all of that wide area above us, all that room to roam up above us, right? Because I will tell you, it's tempting. It's tempting to take this short right here on a retest. But with all of that area above us as clean air, I don't think it makes sense. Okay? Elliot, I will try to get to those symbols at the end if I have time. I really want to make sure that I focus on the things that I normally do in our daily market commentary. So I'll try to get there if I can. I'm trying to stick to 30 minutes. I know everybody's going to want to get to their day. All right, but I will do my best. All right, so looking at the ZN, we did come into our ZN level yesterday in the overnight. 1, 2, 3, 4, 5, 6 candles later, what did the market do? Nothing, right? If anybody's ever seen the Rudolph the Red-Nosed Reindeer, I think of Yukon Cornelius. Nothing. The market did nothing. So it said, take your stop, move it to break even. At the very least, close your position out for no loss, no risk, no trade. You took risk when you got into the position. And now we're sitting at this little wick over wick reversal point here. Let's see if we get some basing here for a potential breakdown. That could be a setup for a trade. Would be a breakdown below this wick over wick area here. A little bit of basing in front of there. Next, in the Aussie. So the Aussie's the other stop out we got yesterday, as the Aussie came and just blew right through that level. I thought that one would be all right. Obviously, I thought wrong, and the market just totally laughed at it, just blew right through that position. Now we do have a 4-hour trend that is entrenched with boredom. And so what I'm going to do now is nothing extra. I'm not going to add anything to my charts because of this 4-hour trend being sideways. I think that a 4-hour sideways trend, to me, makes this a less probable setup. And so I'm going to wait until we get a more definitive trend direction. You're going to see that a lot here in the currencies. The euro did not give me an entry, and the reason that the euro didn't give me an entry is because we almost touched it and then pulled away. And so we then turned this to a confirmation, and it popped right through based on our rules, right? So that's what confirmation entries are good for, is they keep me out of bad trades. Now, we did talk about a potential breakdown here on this level. I didn't wind up really getting any clean touches on that piece. And so I'm going to look up a bit higher in the overnight to right here. At this 12478 by 12527. Yes, no, I will call out the numbers. Yeah, there's delays, I think, for a couple of people. Sorry about that. Well, it looks like we got filled on our little micro position, which is nice. So we'll just let that thing go for a little bit. So as this area in here, this 2478 by 2527 area could work for a decent little supply. However, it's on a 15-minute chart, so I have to switch it to a confirmation entry. All right. Yeah, I do. I'm sorry about the delays. There's nothing I can do about the delays on this piece. The delays are the chat window is way behind what you guys are looking at, because I've got a window open where I can see what you guys are looking at. And it looks like you guys are probably still on the ZN on the charts, and my voice might be going ahead of the charts, which is definitely going to be a pain if that's the case. So, all right. Moving over to the Canadian dollar. So looking at the Canadian dollar, this one was another one that was a bit frustrating. And the reason that it was a bit frustrating was because we had a really nice potential breakout trade that gave me no basing for the breakout entry. We just popped right through the level. So what I'm going to do, I'm going to remove that level that's the 73,308 area inside of the Canadian dollar. And so with that, what I'm going to do is take a look at the level below and see if that becomes a potential reversal on the return of that breakout. So that would be 73,081 by 73,153 in the Canadian dollar. Yeah, Scott, the candle to candle on the ES did just trigger. That's the one that we just got filled on. Okay. Let's see. I'm going to take a look at my last two markets here, the Great British Pound and the Japanese Yen. When I take a look at those ones, we will see what that looks like for potential price action. And what I'll do is I will, for those of you guys, I see that we have a bit of a lag. Yeah, I know the tons of freezing. I'm going to work on that for the next week. I may just frankly go out and buy a new computer. It could just be the processing speed. I'm not sure why we're getting a lag. It looks like we've frozen on the euro position that I was looking at. So I don't know why that is. Giovanni, I know you've done a couple of YouTube live sessions. Maybe you can tell me what I'm doing wrong. I'll go back in and look at it to make sure I can do it right. This is my first time doing it, so here's what I ask. Give me a little bit of grace since it's my first day doing it. That's all I ask, a little bit of grace. So on the British pound, looking at the 4-hour chart to give me a trend direction, my 4-hour trend direction on the British pound is very decidedly to the downside. Okay? Very decidedly to the downside is my 4-hour trend direction on the pound. I've got some high upper wicks that make for a pretty good reversal possibility on the 4-hour, even for a candle-to-candle setup. So looking at that, I'm going to put a line at 1 0.2363 underneath my last 4-hour pivot. And from there, I'll go to the 1 hour and see, okay, if we get basing at that level, then it will make sense below that 1.2363. So if I get basing at 1.2363 on the pound, then that to me is a really nice breakout candidate. And the reason that I like that is because of what it looks like on the 4-hour. Because of what it looks like on the 4-hour, it makes a lot more sense, and it's a much better high probability trade. And then the Japanese yen, we had a breakdown yesterday, got a little move away on that breakdown. So we did get a little bit of a move away from there, allowing you to take the chance to move your stop. And then in the overnight, it popped back up. I was really hoping this would be a runner. I really did. I thought that we had a really good chance for this one to be a pretty good runner. But unfortunately, it just did not come to fruition. Got a really nice breakdown set up, but we didn't run as long as I expected, and it was really on the open of the Japanese markets yesterday that we reversed. We reversed right at that 009254 area and came back up. So if you took the short on the breakdown, you got a little bit of coin, but not as much as I would have hoped, unfortunately. And so now above us, we've got a couple of levels to kind of look at and pay attention to. The first one being the supply level at 0.009335. There's a supply level at 0.009335 in the Japanese yen, and so we're looking at your proximal line is 0.009335. Your distal line is 0.009317. So those would be the two levels to look at in there. All right. So those are the levels that I've got in my different markets. I apologize if they're a little bit on the slower side and we've got a little bit of a lag. I will take a look. I do want to look at the S&P to look for potential options trades today. For those of you that trade, when you look at the SPX, one of the things about the SPX is that it gives us the potential to trade daily zones, right? We can trade daily zones in the SPX where we think that price has a chance to stay between a range. And if I can trade inside of that range, I can usually make a pretty good little options premium. And so the markets are going to open here in about an hour. So looking at our weekly chart, all right, which is our big picture, we see that we've been inside of each other's weekly range here for the last couple of weeks. Our daily chart, we see very much, similar sideways kind of pattern, staying above that 3,000. So if I'm looking on the hourly chart, which is where I would look to see where's my level of demand that makes the most sense, I'm going to take that SPX and use the ES to help me to identify where those levels might be, right? Because the SPX isn't going to give me the same levels as the ES, but I can lean on those SPX levels. On the ES levels to tell me, okay, where might we reverse? So right now, the SPX, if it were to open right now, is going to trade right about here. So now what can my range be? And when I say right about here, it's going to open right around 3075, right? Somewhere in that region. Well, if I look a bit higher and say, what can I get from an options premium standpoint? I'm going to want to look to where are my boundaries for the day. And my boundaries for the day are going to be the pivot highs and the pivot lows where I think price is going to have a hard time getting through. So I'm going to look to this 30-35 area, first of all. So if we can stay, that's fairly wide. I'm going to look to that 30-35 as our lower boundary for the day because of this lower pivot in here. And then, I think that 30.93 is a good upper boundary for the day. So 30.35 by 30.93, I think that there's a chance we'll stay in between that region. Now, obviously, be aware of news and things that come out. But so when I look at the SPX and I look at the options premiums on there, obviously on this one, we're going to have to wait until the market opens before we know exactly what we're going to get from an options premium standpoint. But when I look at this, one of the great things about trading options is that I can do the daily position here inside of the SPX. And so when I look at these single 1-day options, and my Thinkorswim's actually getting a bit slow on me as well. When I look at these 1-day options inside of my platform, I'm going to look to those boundaries that we set up, right? That 30-35, that 30-35 buy up there above 30-95, and see, are we going to be able to get enough premium to do that? So that would be one worth looking at once the market opens up. We're not going to get it until the markets open up. So that's what we need to wait for. So look at that for a boundary, and I'll see if that makes sense inside of these options expiration periods as those markets set themselves up. So let's see if I go a little lower here. The 30-35. So that 30-35 by 30-30 is giving you a 30-cent credit. Lots of 30s there. 30-35 by 30-30 is giving you a 30-cent credit, which is really not too bad for the distance and where it is right now. And then the 30-95 or 31. Yeah, we're not going to get a number on this one as of yet. So let's wait till the market opens up and we'll see what we've got on there. All right, so real quick, let's see. Elliot asked about a couple of stocks. Let me just take a look at them real quick. I know I told you I would go 30 minutes, but I'm going to go just a few minutes longer since Elliot asked into those. Yeah, Scott, that's a great idea. I will jump into the live. Actually, not the live trade room. We'll go into the member chat room, Scott. I'll jump into the member chat room if that works for you. All right. So let's pop over to the. Let me take a look at Boeing real quick. So the question on Boeing that Elliot had. Let's see. So Boeing, we had that move yesterday or the day before that was that gap up, and price had rallied, and we got a little bit of a run out of it. Now let's look to see, is there a decent gap fill? I've actually still got a level right in here for a potential reversal there at that 156 region. But when I'm looking at Boeing, if I'm looking at Boeing as a day trader, and I move to the hourly chart, you're looking right now. We're going to open up at 181.55 by 181.73. So we're opening up in between our gap, and we're going to gap down just a little bit from yesterday, but we're going to still be above Friday's gap. So if you really want to trade the gap fill level, I think you can. I'm not a huge fan of the gap fill level in this position because if I look at all the other prior gaps, the market is blown right through all of those other prior gaps. And so if we gap down and trade down into this 170, I think you could see a bit of a reversal here. It's a little bit difference. Andrew, I see your chat that just came in. There's a 14-point difference between the ES and the SPX. There is right now because the market hasn't opened yet, Andrew. That will come together once the market opens. So we got to wait for the market to open. That will be why you're seeing that difference, and that's why it didn't make sense for me to even look at those options premiums as of yet. I should, if I did this right at market open, it would actually make a lot more sense. So, all right. So on the Boeing, you got that 170.93 by 169.71 on the hourly chart as a gap fill level. I'm not in love with it, to be quite frank. I just don't think there's a whole hell of a lot to trade here in Boeing. So I think you kind of be forcing something by looking too deep into Boeing. The other one was ADMP that you'd asked about. ADMP. Is ADMP the right one? Yes. So it's a 53-cent stock. My belief on a 53-cent stock is that no technicals matter. It's too small of a price, and so I don't look at technicals on penny stocks. These are ones that big boys just move around to their whim. So if you like the stock, then to me, spend $5,300 and buy 10,000 shares and just let it sit there. I mean, I hate to feel bad. I just can't. I don't analyze penny stocks because it's really hard to get any technical analysis out of that, Elliot. If you've got some sort of inside information, I don't mean inside information. I mean if you have some fundamental information that would make you want to be a buyer of this because it's got some fundamental reasons to move higher, then I think it's okay to trade it. But my rule on any stock that I'm trading that this cheap is, I don't even put a stop. I just have 100% willing loss on these positions because they're like lottery tickets. VSTM would also be the same thing. So this would be another one that, from a technical standpoint, if it gets above $2, you've got a potential breakout trade. Realistically, once again, stocks that are this low in price, I'd much rather trade a higher price stock that has higher probabilities, because these are if you want to trade them, then you're looking a little bit more at I call them lottery ticket style trades. So hopefully that makes sense to everybody. And I didn't mean to, I'm not throwing any trading style under the bus. I just don't really like trading these cheap stocks because it's just not in my wheelhouse. I will say one of them that's setting up really nicely. For those of you that do trade options, you have to be an options trader to really get much out of this one. ILMN is setting up for a potential upside breakout as we get above this 380 number. I'd much rather buy an expensive stock at an all-time high. And that, to me, looks like it makes a bit more sense. So keep an eye on that one for an upside breakout. Your volatility on this one will determine the options trade that you do, but I do like somewhere above that 380 for a breakout to allow price to continue to run on that one. So, all right, everybody. Well, I'm going to turn our stream off for the day. Once again, I apologize for the latency. I'm going to work on that on my end. Let me know what hopefully I can figure out what to do on the technical side to